We usually think of boring as something to run away from, right? Well, in this explainer, we're going to completely flip that idea on its head. Because when it comes to building wealth, boring is actually your ultimate financial superpower. Today, we're going to reveal exactly why the quiet, methodical investor always wins the race and how you can adopt their bulletproof strategies starting right now.
The boring investor always beats the exciting one. It sounds crazy, I know. It totally defies human nature. We're hardwired to crave that rush, to hunt for the quick win, the spectacular trade, the overnight success story. But the ultimate cheat code to wealth is surprisingly simple. We're going to explore exactly why chasing adrenaline and fast cash almost always leaves you broke, and why adopting long-term, unglamorous patience is what actually guarantees lasting wealth.
Section 1. The Fast Money Trap and Escaping the Get-Rich-Quick Illusion.
You know, the media absolutely loves to sell us this Hollywood fantasy of high-stakes day trading or massive lottery-style payouts. But here's the reality about fast money. It is incredibly unstable. It runs on pure hype, it forces you to make decisions based on emotion, and because it has literally zero foundation of financial discipline, it disappears just as fast as it showed up. Slow money, on the other hand, is the exact opposite. It's not going to inspire a thrilling movie montage anytime soon, but man, is it reliable. It's automated, it is incredibly boring, and honestly, that's exactly why it works. It builds lasting empires because it relies on time, not luck. Fast money schemes vanish in a flash, but slow money? That stays with you forever.
Section 2. Why boring always wins, looking at the math of predictable growth.
So, boring isn't just some mindset shift. It's a mathematical reality that actually outsmarts market chaos. Take active trading, for example. The effort required is huge. You're constantly stressing, making emotional guesses, trying to time everything perfectly. That racks up massive hidden fees that just bleed your capital dry. And the success rate? Shockingly low. Literally, professional Wall Street hedge funds consistently fail to beat the market over the long term. Now compare that to index funds. The effort is near zero. No daily stress, no guessing. You just passively own a piece of the entire market. The fees are basically nothing, keeping your money in your pocket. By cutting out human error and excessive trading fees, the simple, boring strategy mathematically crushes the exciting one every single time.
The real secret sauce here is the 1% rule. You don't need these massive, dramatic life shifts to get wealthy. You really just need to improve your financial habits by 1% a day. Maybe it's saving a few extra bucks today, tweaking your investments tomorrow, or just slightly reducing your impulse buys. In the moment, it feels completely insignificant. It's utterly unexciting. But let me tell you, making those tiny, daily 1% improvements snowballs into an absolute financial avalanche over time. Consistency will always beat raw intensity.
Section 3. Systems beat human willpower, and how to automate your future.
Here's a hard truth we all have to accept. Human willpower is incredibly unreliable. It's a strictly limited resource. I mean, we can barely resist a free donut in the break room on a stressful Tuesday afternoon, right? Let alone stick to a highly restrictive budget for a whole year. Eventually, you just get tired. Life happens. Stress triggers emotional spending, and boom, your willpower breaks. The wealthy intimately understand this flaw, which is why they don't even try to rely on motivation. They build systems instead. Willpower gets exhausted, but systems, they run forever in the background, requiring absolutely zero daily motivation from you. So let's walk through how you actually remove human error from your wealth building. Step 1, your paycheck hits, but instead of letting that money sit in your checking account begging to be spent, Step 2 instantly kicks in. An automatic percentage is routed straight to your emergency savings. Then Step 3, another automatic chunk goes right into your investments, like those boring index funds. Only after all that do you reach Step 4, where you spend whatever's left completely guilt-free. By paying your future self first, automatically, you completely remove the daily temptation to overspend. You never even see the money you're investing. Your wealth just quietly builds in the background while you go live your life.
Section 4. The Hidden Wealth Delay and Surviving the Flatline.
Okay, this is arguably the absolute hardest part of the boring strategy. When you start investing, you naturally expect instant results, but money operates on a delay. In year 1, growth is completely flat. It's deceptively slow. You're making all these sacrifices and it feels like absolutely nothing is happening. Year 2 requires extreme patience. Your money is working through invisible compounding, but the growth is so tiny you barely even notice it. And tragically, this is where like 90% of people just give up. They get bored and quit right before the compounding curve bends sharply upward. But if you can just survive that flatline, you hit year 10 and beyond, and that's when you see explosive vertical growth. That is the ultimate payout for your patience.
And the engine driving that vertical growth is compound interest. It's not just your initial money making money. It's your returns earning their own returns. Think of it like a tiny snowball rolling down a mountain that suddenly turns into a massive, unstoppable boulder. It violently shifts your wealth from linear growth to exponential growth. Compounding is the ultimate reward for long-term patience. It does not pay you on time. It pays you late. But when it finally pays, it pays incredibly big.
Section 5. Play the long game, choosing decades over days.
To truly capture that massive compounding payout, you've got to change how you view time. The people who successfully build wealth operate on a completely different timeline than average earners. They actively practice the habits of the invisible rich. They think in decades, not single days, because they know short-term focus kills long-term gains. When they get a raise at work, they don't immediately run out and finance a flashy, depreciating luxury car just to impress the neighbors. They delay the lifestyle upgrade and invest the difference. They completely stop checking their stock apps on a daily basis to prevent panic selling. Basically, they deeply accept the wealth-building delay. They quietly buy compounding assets and just let time do all the heavy lifting.
If you sit down and ask any self-made millionaire what their true secret is, I promise you they won't share a magical stock pick or some highly guarded get-rich-quick scheme. It all boils down to this. The only thing that actually builds wealth is boring, daily consistency. It's about executing a simple, automated financial system every single day without stopping, ignoring the noise, avoiding the hype, and staying quietly on your path. Simple isn't always easy, for sure, but it is the only mathematically proven path to absolute financial freedom.
As we wrap up this explainer, I want you to look closely at the financial habits you executed just today. Look at what you spent, what you saved, what you consumed. Based on those specific actions right now, is your future self going to thank you for setting them up for freedom? Or are they going to blame you for prioritizing short-term comfort? Are you willing to embrace the boring today to mathematically guarantee your freedom tomorrow? The choice is entirely yours. Start building those beautiful, boring systems today.